We made it to another Friday. Things are looking ugly in oil. I'm going to talk about that. More good news for investment in Canada. I'll talk about that. And why taxing the rich doesn't work. Yeah, let's start with oil and gas this morning. It's low. It's not looking good. I mean, it's looking good for us. Not looking good for oil and gas. The Saudis are doing that thing again. This is from earlier when it was a little bit more expensive, but you can see it's touching the low points from earlier this year. Same story with gasoline. Like literally, this odd behavior has been happening for the last 5 days. And here's the 1 year, and you can see the downturn. Like the sudden shift in sentiment. What's going on? There's fear in the market. I'm not saying there's a crash happening right now, but there's a lot of fear out there. Stories like this don't help. For the first time in 20 years, investors say companies are over-investing. The other day I was talking about data centers and how that's being funded and how we really don't need them. So that doesn't help. Like, just think, the power that's on your phone right now, 30, 40 years ago, that required a room full of computers. My phone is more powerful than my laptop from 10 years ago. It's more powerful than my desktop from 20 years ago. As I'm sure you understand, real estate is a great investment because, it's bricks and mortar and it'll be there for a long time, right? If you build a factory, it's fantastic because that factory will be humming for years to come, decades to come. But these data centers, maybe not. All right, good news for Canada. Norwegian battery company to build $3.2 billion synthetic graphite plant in Ontario, in St. Thomas, Ontario, next to the PowerCo facility. This facility will help support the PowerCo facility. The company is called Vianode, and they broke ground yesterday. This is obviously going to transform St. Thomas, but it's going to have a knock-on effect on all of southwestern Ontario. Big boost to Ontario in general. And then there's this. China's EVs dominate the world. Why not in the US and Canada? China makes more than 70% of the world's electric cars, but it's hard to find those vehicles in North America. True story. And if we drop the tariffs, they'll be here as well. And these types of investments lay a foundation to attract Chinese investment to build those cars here. They're already building some of these in Brazil. It's worked out fantastic for them. Is it a guarantee? Of course not. But it's a step in the right direction. All right, from airlines to winemakers, U.S. businesses push Trump to preserve North American free trade. He likely won't, because that tariff revenue is fantastic. They wouldn't need this tariff revenue if they just clamped down on people not paying their taxes. Kinda. All right, follow me here. Canadian housing market structural problems are too large to ignore despite slight uptick in October. Long story short, young people aren't getting paid. And it's strange that they're supporting conservatives more than liberals. They're supporting the ideology that will make sure they get less pay. And higher asset costs. I don't really understand. Anyway, the point is this. They feel that the solution is taxing the rich. But it's not really. Taxes were not that much higher on the rich in the 1950s. They were. The taxes were higher, but marginal taxes, not that much higher. So there's the 1950s right there, and that's where we are now. You can see the marginal tax rate hasn't really gone down that much. What has changed is how the wealthy are getting their money. Stock loans, unlocking liquidity without liquidation. Jeff Bezos, great example. Do you know how much he makes a year? About 80 grand. That's his taxable income. About 80 grand US. All the rest of the money they got, it's loans. Loans against their stocks. In the 1990s and early 2000s, advances in custodial technology, regulatory clarity, and rising equity markets contributed to the wider adoption of stock loans as a tool for liquidity and portfolio management. Now, there's two ways of doing this. This one's the most popular because it makes it look like the owner of the shares still holds the shares. The first, through a pledge agreement in which the borrower retains legal title to the shares. In this setup, the shares are typically moved into a segregated custodial account under the borrower's name, and the lender holds a lien on the shares. If the borrower defaults, the lender has the right to seize and liquidate the shares, but cannot pursue further claims. You got that? So let's say you got $1 billion worth of shares in some company. You can put that up as a guarantee against a $1 billion loan. The bank gives you $1 billion, and if you don't pay it back, that's when they sell the stock. But of course, some of that loan you took out is to cover the cost of the loan. And if for some reason you run out of money, you just do this all over again. Billions and billions of dollars untaxed. Which is why they prefer the tariffs. Because then they just move the tax from the rich people to the poor people who have no choice. Will this work forever? Nothing is forever. And when it fails, there will be signs.